We start with breaking news, and Lloyds Banking Group has said in the last half hour that it plans to close 136 high street branches. The closures will affect its Lloyds, Halifax and Bank of Scotland brands. In a statement, a spokesperson for the bank says over 20 million customers are using our apps for on-demand access to their money, and customers have more choice and flexibility than ever for their day-to-day banking. They added, alongside our apps, customers can also use telephone banking, visit a community banker, or use any Halifax, Lloyds or Bank of Scotland branch, giving access to many more branches. Well, our business presenter, Darren McCaffrey, is here. Darren, more flexibility for customers, but possibly less flexibility if you're depending on the branch that's on your particular high street.
Yeah, indeed, and this is part of a trend, not just from Lloyds Banking Group, but we're indeed seeing it across the sector. Why is it? Let's be honest about this. Clearly, increasing numbers of customers, Jane, are using banking apps rather than having to deal with banks in person. I think Lloyds Banking Group is suggesting that the number of interactions with their actual physical banks is down some 55% in the last 5 years. So then it is maybe not a surprise that they are closing these 136 branches. Talk you through the figures. They are 61 branded Lloyds banks, 61 Halifax banks and 14 Bank of Scotland branches, and this will happen between May of this year and March of 2026. It should be added, this is on top of closures that have already been announced. Now, the good news is that this is not going to affect jobs in Lloyds Banking Group. Those jobs are going to be moved elsewhere within the company, and we've seen that in the past from Lloyds. But as you say, it will have an impact on those customers who do still depend on branches, particularly the elderly, when it comes to banking in this country. But frankly, the economic inevitability of this is clear to not just Lloyds, but in the entire banking sector. That, you know, for lots of us, and I speak this from a personal point of view, I mean, I can't remember the last time I went into a bank branch, and clearly millions and millions of Britons are now doing their banking online rather than in person.
Yeah. Darren, as we've been talking to you, another story to just get you to respond to, Tesco has announced cuts to 400 jobs across its stores. These are at its head office and its bakery, so not great news from the high street.
No, not at all, and this actually reflects a statement, very similar one that we saw from Sainsbury's last week. 3,000 jobs going in their cafe and bakery section and head office too. Now, I haven't seen the statement from Tesco, but I suspect, and we've heard this from business quite a lot in recent months, in part this may be due to the increases we've seen in or we will see in national insurance contributions for employers coming up later on this year, effectively a tax on employing people, if you like, and also that increase in the minimum wage, which many businesses have said, even big ones like Tesco, is going to cost them a lot of money that they might find unaffordable. And I think there are concerns. We heard this big speech from the Chancellor today. You've been talking about it, about economic growth. But many businesses feel that actually one of the barriers to growth has been those tax increases, if you like, which could see unemployment tick up this year. It's already on the rise, and I suspect that statement from Tesco, following on from Sainsbury's last week, and these are companies, Jane, by the way, that are doing very well, that had very good Christmas sales, that they may well continue to cut jobs as we go throughout this year, and that is not good for the government, and clearly, frankly, it's also not good for immediate economic growth.